This is Greg for Teslafaninsight. Our focus today is trading over the next week of both Tesla and Nvidia and what might one expect. Now, the answer is that there's a lot of reasons to avoid watching trading in the short term on both companies. And that's one of the reasons why we typically don't cover it, because what can happen in 1 or 2 or 3 days is nothing like what you can watch over, a month or 2 or 3. Peter Lynch suggested that pretty much 33 months is the only realistic number that you could look at that's somewhat predictable. Everything else, it's just not worth the time because of how unpredictable that is. Just a reminder, please take time to like and subscribe, hit the bell button so you don't miss anything. We also want to encourage you to join us on Patreon if you'd like some better ideas on investing and trading. So yesterday I had a chance to watch a video. It was focused on a Japanese trader who made about $500 million over a 3-year period. And it reminded me why I hate doing trading shows right now. In particular, what it looked at was the fact that he spends most days staring at screens all day trying to scalp the market, meaning picking up small amounts of money from identifying sort of trading inefficiencies that he can take advantage of in situations as short as 1 or 2 minutes, and then selling out immediately for that profit. So I actually had 2 videos that I watched this week. One was of a fairly disciplined Japanese trader who did very well. And then the other one I read was from an Indian trader in London who was credited with creating the flash crash that many of you may remember occurred. So the structure of today's show is to, one, discuss in general what's going on with trading at Nvidia and Tesla in my mind. And then the second part will be focused on looking at the flash crash trader and how he affected the market, because his trading fits the type of things that are going on in the marketplace as you're trying to execute your trades, for hopefully more long-term investing than short-term. So first of all, as we know, Tesla's coming out with numbers. Tomorrow's the first. Today is the last day that the vehicle sales affect. As I shared before, I expect that the short-term traders will punish Tesla because of the Hertz sales wiping out theoretically 100,000 sales for the quarter for Tesla. So if you're a long holder of Tesla, please consider doing some puts, maybe 5% of your portfolio as a hedge against it dropping. Remember, if you own the stock and it rises, you're in great shape, because the rise of the stock will cover the losses you might experience on the puts that you purchase. But the nice thing about the puts is that you get to preserve some of the value you might have lost. As you know, Tesla's sales and revenue were down, but the counterweighting variable is that they've terminated 14% of their employees and reduced production. So theoretically, their break-even point is lower, in addition to the lower lithium prices sort of giving a rising sort of price run that Tesla is likely on in terms of costs and therefore profits against lower revenue. So my expectation this week is that after we get the numbers Monday, we end up, or Tuesday at the latest, we end up with something like 20 or 25 point hit for Tesla. And that's when we wait for our 3-day rule to come in, and that shapes the market differently at that point. So I'm hopeful that, cooler heads will prevail, but it's kind of hard to see how that's going to happen here just because we know what Hertz sales were and the fact that they're going to hammer Tesla sales based on people purchasing the Hertz vehicles and not Tesla. So there's nothing I'm doing to that's negative about Tesla or anything like that. It's just sort of standard numbers. The second item I wanted to cover before getting over to more of our trading discussion is Nvidia. So an interesting problem has occurred, which is um, something called full value. So basically, the challenge that Nvidia has right now is it has a problem that's called price to perfection. So value investors want to buy a stock when its uh, when its price is below what it should be. Um, the issue right now is that Nvidia is priced to perfection. What that means is that they have a higher chance of dropping than they do rising, just because um, everybody is in it now and everybody realizes that they have to be in it. So one of the so I have a trading buddy of mine, Sam, and we often talk about, well, what's going on, and the suggestion is, and there's no chance that Nvidia becomes a $5 billion company, and therefore we should see the stock price uh, moderate and perhaps drop into valuations that kind of make more sense. I have to say that um, I agree. The logic is sound, but there's something that that somebody came up with. I like it. The math doesn't math. And what I mean by that in this case is that in short periods of time, things can accelerate into some high level pricing for a bunch of other issues. And if it's normal and makes sense, it will stay long term. If it's not normal and doesn't make sense, it will, the marketplace will adjust to get you into the normal zone. So in the case of NVIDIA, obviously it's a great concept of what they're doing. I'm still blown away. I'm still learning about who they are, what they're doing, why they're successful. And I'd encourage you to do the same because what they're bringing forward really changes the future of investing and trading, as well as a lot of industries that they're being utilized in. And I think it's really worth your time to try to get your arms around who they are and what they're doing. A lot of folks that I know that are wealthy have actually sold out of NVIDIA already because they feel they've gotten most of the benefit. If you're on that 3 to 5 year horizon, I still think they're a great buy, but you have to wait to get your money out over time. Now, the flip side of that is that um, what I enjoy doing on my shows is a little bit of sort of training, if you will. So if you're an investor or trader, you have a job to do, and that is that there's a whole bunch of channels that cover a whole bunch of different subjects. But inherently, what you have to be able to do on a weekly, monthly, multiple month basis is to be able to generally see who's where and what they're doing and why. So right now, you and I are now living in what I call the index world. So 69% of the investors out there are folks above 50 planning for their retirement. So the structure of our portfolios is optimized by using indices because you get to in essence run a mutual fund where a mutual fund has a bunch of stocks and there's safety in numbers because one stock going down doesn't wipe you out. So hence the index funds are terrific because they're making good returns, S&P level returns, and the ownership is spread across all the companies, the S&P, so you keep making money, not as much as you would if you picked an individual stock like Nvidia or Tesla and then it made a run, but it's a lot safer to go that route. So a lot of what we're watching right now is, well, we know what the hedge funds that operate on a daily basis are going to do and say, but what's happening with the index funds and the money that's in those funds? So that there's a cycle. The cycle is, let's say Nvidia or Tesla rises or falls. Their weighting inside that fund has changed. So for example, I think it's actually coming up in the next few days, which is the S&P organization will issue a sheet of paper to all of the major entities around the world that have to conform to that index. Those people then are required to redo their portfolios according to the weighting around the, according to the rate, the weighting, and all these pension and mutual funds all around the world and individuals funds have to adhere to that if they're going to be a part of that. There are other entities that are less restricted because they mirror, but they don't have to do everything that they're told. And so one of the things you can do to figure out where we're going is to ask, well, what are they going to be doing? Well, I think the answer is that those dudes have to buy whether they like it or not. And the reason they're buying is because they just got a piece of paper that says, this is the weighting in your portfolio that we've now allocated to, let's say, Nvidia or Tesla. And you guys have to increase your ownership in order to address this. So you notice how when I said this, let's say in the case of Nvidia, because of how strong a run they've had, especially now that the stock is split, I didn't say to you they're going to look at the stock and see if it's a good price or bad price. No, I just said they have to adjust their weightings. So one of the crazy things right now about how investing works is that when those people adjust their weightings, you could see a stock price start rising, not because it's done any better today or any worse, but just because their weighting in the S&P has changed, and there are trillions of dollars that have to move toward or away from certain stocks, in this case towards Nvidia. So all I got to say is that watching the annual calendar, there are 4 periods of how weightings and when weightings change can make you a lot of money, because you know when the mutual funds have to readjust themselves to address their weighting of a particular stock. I really feel like when you watch Tesla over the last, let's say, 6 months, 8 months, you really saw how weighting hurt the company. The stock was already down, and then let's say it dropped from 250 to 220 or 210, and then the weighting rules came out, and it further dropped, not because it was doing any worse, but just because the weightings had changed. So I just want you to encourage you to think about this, because you're going to see stock movement that doesn't make any sense from a valuation standpoint, but it makes sense relative to a weighting standpoint. So in the case of Nvidia, I do think it's fully valued, but the problem is there's a bunch of people, because of how rapidly it moved, that have a weighting problem. The other thing you should be aware of is that, like, there's been an evolution over time. You know, 40 years ago in investing and trading, there are a lot of individuals that were money managers, and they were using models that they created to do certain things relative to the market. What's happened over time is you have more MBAs, more people all looking at the same screens and the same metrics in terms of how to value things. So we've gotten homogenization where all of a sudden it's very hard to differentiate when you have a very tight set of parameters that you have to invest with, and everybody's looking at the same screens. So all I got to say is be mindful of this, because it's definitely going to affect your investing and your process. Now, all that said, the thing I wanted to look at today is there was something called a flash crash. Now, I watched a video about an Indian, I want to say teenager, but he was more like a young professional. And he was a trader in London. And what he found was that over the, let's say, the last 10 or 15 years, day traders have been kind of wiped out. So you remember there are a lot of people who were going to these day trading firms, and they were being trained how to day trade, and then they were making some money, and then that brought in more people. Well, that ended because you have a lot of well-trained people from the best and biggest firms. And what they did was they were making money for the large firms, then they went out of house and started doing their own funds. And what they would do is get capital from a lot of different places, and they would use computers, very high-powered computers, to, in essence, suck money out of the market as much as possible. Most of those victims were typically day traders who didn't have sort of the market power they had to move markets and control what happens with certain stocks. So the word for the day I'd like to ask you to look up is something called spoofing. What is spoofing? So the reason why you need to learn this word is I met with an SEC lawyer and he said, yeah, spoofing is a big problem that they're struggling to manage, I think. And then this is exactly what happened. What happened is that as bots have taken over the trading process, they're able to move very quickly in and out of the markets. And there's a technique that they developed called spoofing. What the technique is saying is that, okay, let's say I want to buy some stock. If I'm an individual, what I would do is go onto my computer and I would pick the stock and I'd say I want to buy 100 shares and I would buy it. And then, obviously there's a bid and ask. You can choose what the price is going to be. But pretty much, if I'm serious, I'll get it really close to what it's selling for and I'll just buy those shares. Done. Well, that's what individuals do. Let's talk about how spoofing works when it comes to bots or people who write programs for their trading. So what people will actually do is instead of saying, I want 1,000 shares of Tesla, they'll actually put, they'll go out there and say to themselves, oh, well, I need 1,000 shares of Tesla, or let's say a bigger number. Let's say I need 10,000 shares of Tesla. So one of the techniques you can use is to say, I want to short Tesla stock right now, anticipating it's going to go down. Now, after I short the stock, the marketplace will see that short and say, well, do they know something we don't? And that stock price could actually dip slightly. Well, guess what? The folks that really wanted to buy, not sell the stock or short the stock, will actually buy the stock they want on that down dip of the price. And now, before those trades are executed, they will sell off all of that. Let's do the opposite suggestion here. I want 10,000 shares, but at a great price, or I want to sell 10. So you could do pretends that, oh, I'm going to buy all these shares, and that therefore everybody's thinking the price should rise. Then you sell your shares and you cancel the orders that you had there, and this allows you to make more money in that process. So this is called spoofing. My explanation isn't perfect, but I just want to encourage you to be aware that it's out there and that you've been seeing it indirectly if you see movement of stock price, etc. And so what happened in London is this gentleman actually did a process where he was watching the bots or computers that do computer trading, and he would watch how they would scalp, take small gains and leave and sell, small gains and sell, small gains and sell. And so what he decided to do was write a program where he would do the opposite of what they were doing as a way to force them into mistakes. So the flash crash that we saw, I think it's 3 years ago now, was driven by the fact there are certain people who saw how the bots traded, and they simply created spoofing circumstances to take advantage of how those computers were programmed to trade. And as that whole battle was going on, you basically had, they had to shut down a number of stocks, they had to shut down markets even, because there was a flash crash where the computers in essence ended up battling each other to the point where it put the whole system into haywire mode. So I also bring this up to you because one of the books that you'll see below I recommend is something called the Black Swan event. And based on the degree of us getting percentage-wise more and more automatic trading going on, we're seeing more of these bots controlling all the trading. And so you're going to see things happen where you know what the price should be of this company, and suddenly it's a lot lower than it should be. It could be higher, but a lot more lower is one of the expectations. And what you're witnessing is something that I'll call a bot war, where there are different entities that are at war with each other. And as they battle computer to computer, all these numbers are being generated that nobody has control of. It's simply computers battling each other. And in that battle, if you're comfortable with your valuation of the company, be it Nvidia or Tesla or any others, you can actually make a lot of money there by taking advantage of the fact that these bots can actually go haywire and go to war with each other and yield huge returns for you, and they have to pay it. The companies have to pay it, even though their computers went rogue on them. And so I think it's a really interesting thing that's going on, and it represents sort of the new normal, and it's definitely worth the time to learn a bit about it. If you're a long-term investor, this is no big deal. If you're a medium to long-term investor, huge deal. So the final thing I wanted to bring up is this whole deal with Nvidia. We predicted in November, like I said, we thought it would double for a number of reasons. Um, the biggest reason that I think it's an awesome stock to consider to focus on is in Silicon Valley, there's a concept called bet the jockey, not the horse. So when you look at this whole field, most of what's here, Nvidia has 80% market share, almost a monopoly right now, and others are trying to push into the space. Well, Jensen Huang, the CEO of Nvidia, sort of invented the field, and his viewpoint and process management of the environment, I think gives them a huge advantage over competitors on how to manage oneself in that environment. And so therefore, I just think they're a great company. They're well managed. The plans they have going forward are excellent. And there are going to be others like Intel and AMD, some of the other names out there. They're going to do a good job. But it reminds me of a famous line from the old days where they used to say, nobody ever got fired buying IBM. If you're going long on Nvidia, it is pricey right now, but I really think that just like what they used to talk about IBM, Nvidia is the new IBM. So it's really worth your time to picking up some shares, put them away, hold them long term, and don't think about it. And when everybody says everything's overvalued, pick up some more because it's incredible what they're doing and the difference they're making for customers. So, at any rate, please reminder, please drop us a like, please share a comment. Um, I also wanted to move on to our health tips. I'm about to go for my 20-minute walk right now, as usual. I wanted to thank you again for joining us. Um, Also, a reminder, don't forget, try 2 weeks of going to bed and waking up at the same time. And I think you'll find that your body gets into a rhythm that you'll get comfortable with and just live a happier, better sort of life experience. At any rate, once again, wanted to thank you for joining us. This is Greg for Tesla Fan Insight. Namaste. Arrivederci. And in Jamaica, we say no respect, walk good, man. Thanks for joining us. Have a great day, and bye for now.